Hello, everyone. Today is March 22nd, 2024. My name is Roland Kim with the Kim Boona team in Metro Vancouver, top 1% real estate team licensed with Keller Williams Van Central. And today I'm going to give you a market update for March 22nd, 3 weeks into the month and almost 3 months into the year. If you have any questions that are not answered, or if you need specific advice, do reach out to your realtor, reach out to myself if I could apply for that role. And everyone's real estate situation is different and private and specific. So make sure you get the right advice. All right, so let's talk a little bit about last month and where February finished. You may have already heard that February finished with 2,070 transactions. That is a 13.5% increase versus February of last year. However, if you look at the following many years, it is actually the second slowest February in the last 6 years. As of March 20th, there was 1,717 transactions that have been registered on the Vancouver Real Estate Board. That estimates, or that calculates, to 86 transactions a day, estimating that we know we have 31 days in March, so we're estimating that March will finish around 2661, so 2,661 transactions for the month of March in the Vancouver Real Estate Board. That would represent about a 5% increase versus March of last year, probably be the second slowest March in the last 6 years. So what we're seeing is about a 5 to 10% increase year over year in transactional volume, but we're still about 20% off the 10-year average. So a balanced market, steady market, but certainly isn't taking off currently. When we are looking beyond that, we see the long-term provincial sales trends. So what you see on the slide right here is for the last 10 plus years, you get to see the Vancouver, the British Columbia real estate sales numbers. So February for the entire province was 5,497 transactions that took place in February, represents a 15.3% increase year over year. And the visual graph here does show you that, we're substantially still off the 10-year average, as I was mentioning. What's interesting is active listings are up year over year. So we are up 20% for the month of February in the entire province. We have more sales, but there are more listings, and so it appears to continue to be a steady, balanced environment. And to that point, what you see here is that we remain in a balanced market based on the sales to active listing ratios. When I'm looking more closely at the Greater Vancouver Real Estate Board or Fraser Valley Real Estate Board, again, we mentioned that February saw a 14.1% increase year over year. The average price also went up 4.4% in Greater Vancouver. Fraser Valley was a lot busier. Year over year change was 37.8%, and the price went up 8.3% year over year for the month of February. When we look at active listings and months of supply, we can see in the Greater Vancouver Real Estate Board, there was just under 10,000 active listings in February, which represents a 16.3% increase for active listings year over year for the month of February, which equates to just under 5 months of supply. For the Fraser Valley, we had a nearly 38% increase year over year and about 3.8% months of supply. This graph again illustrates to you the unit sales provincially on an annual basis, and you can see that we're trending about 10% higher than 2023, so we're probably similar at the end of the year to 2022 levels. Stable, but certainly not near any of the highs of the very busy years prior to that. Inflation did come down. It is now sitting below 3% at 2.9%. I believe a year ago it was closer to 8%. So it's a dramatic step down after a dramatic step up in inflation. We're still off the targets for the Bank of Canada, wanting to be around 2%. And this will remain one of the challenges for that the Bank of Canada needs to heavily consider when they're addressing future rate cuts. And yes. As far as price per square foot in the Greater Vancouver market, the detached average price is $841 per square foot. For condos, it's $950. For townhouses, it's $787 as the average per square foot cost currently. The unemployment rate in Canada is very stable. It remains low. We are in an environment where I think more people are starting to realize that their dollar is not going as far. And I'd say I'm having many conversations with clients who have real interest in buying up or having a real estate repositioning conversation, but they are, for the first time in many, many years, really, really crunching their numbers and their budget because they're realizing that their dollar does not go as far as it used to. It's a completely different landscape prior or post COVID compared to prior to COVID. But what I can say here is unemployment has gone up slightly, but the future will not be a story about folks not being able to have employment. Rather, they'll be navigating in a very expensive landscape, and that is the story that we're dealing with. I found this to be quite interesting. So this illustration shows you what we're building. So of all the properties built currently, based on the last census from 2016 to 2021, over 40% of every new unit coming onto the market was targeted for the rental market. And if you look here, it's not since the 1970s where that portion of the new inventory coming to the market is targeted for the rental market. So that's really good news if you're a renter. It is something to be aware of if you're, working in the residential market. What's telling you is that of the new properties coming onto the market, more and more will be focused to the renters. And so that's going to put more pressure on the freehold resales. And this is from 2016 to 2021. I'd say in the last 2.5, 3 years, that number is definitely increasing. I bet you by the time the next census comes up, it might be 50-50, and we're certainly migrating into an environment where I believe the future will have more rental purpose built than resale built. And so illustrating as well from this image is the home ownership rate, and it is coming down. In 2011, the home ownership rate was the orange color across the country. 2021 at the last census, it was the lighter color, and it'll be very interesting to observe this over the next decade. I think we're moving from the high 60s, 70s percentage of home ownership in Canada to probably around the 50s. And that's directly related to all the factors that we're constantly dealing with, from cost and challenges and qualification as a buyer. Yeah, it's certainly a different shift in the landscape. So some facts to be aware of, as we mentioned, currently 41.7% of all units created in BC are now rental purpose. That's going to offer a lot more stability and options for renters in the future, but it will have a big impact on future wealth creation, as so many Canadians' wealth and Vancouverites' wealth was created through real estate. And if that is shifting, that is a really big differentiator in the future of how will folks accumulate their savings and wealth. There was an article that came out late last year. It's again nice to illustrate, where the Canadian Mortgage and Housing Corporation said if we were to have a balanced market, or a market where affordability was restored, we'd need 3.5 million additional housing units to hit the market by 2030. Now, a statement like that might sound okay, that sounds fine, but when you actually put it in perspective, it further illustrates that we will never get back to, quote unquote, a balanced or a retraction on price, because the Canadian landscape builds between 250,000 and 270,000 units each year. And based on that calculation, it would take 13 years to achieve this goal, and we only have 6 years remaining. And then furthermore, when you really look at the net Canadian immigration of late, you see the 2022, 2023 were trending at least as high as 2023 this year. And what you're seeing is huge net migration into Canada. And I would say, in the last 3 years, we've probably had net immigration, of a previous decade. So that is having a real impact, that right or wrong on the pace of migration or immigration, we are now starting to see the impacts of that further pressure on the housing. To that note, housing levels, if I didn't make that clear, are at the housing level starts are at the same level as they were in the 1970s. So on average, again, we build somewhere around 250, 270,000 new units each year nationally in Canada. They were doing that in 1972, and that's when Canada had a population of under 25 million. Let that sink in for a while. I mean, that fact in itself is why we are so far behind. We've been focusing on real estate all my career from a demand perspective versus a supply perspective. And so that's what's put us behind and is very hard to try and fix. And again, approximately for every one new housing unit coming onto the market this year, there'll be 5 people coming to Canada. And again, that's very interesting. That has a huge impact on pressure prices going forward. Rent increases have been substantial. We see that the national rent prices went up 8.6% last year in 2023. That was after a 12.1% increase in 2022. They have certainly leveled off. In certain areas, they've come off a little bit in 2024, but those are some alarming rent increases that happened over the last couple years. What we're noticing as well is, well, what we know is that at the recent Bank of Canada meeting in March, they held the Bank of Canada rate at 5%. We have our next meeting in April, probably be another hold. And then it's projected that in June of this year, we'll probably see an interest rate reduction, maybe followed by a few others later in the year, depending on what inflation does and other macro factors. However, what I am noticing is a lot of the folks that are buying today in the Vancouver real estate market, they could have purchased 5, 6, 7 months ago. However, they wanted to make sure that the rates had peaked and were actually not going to go up any further. And so that tells me the market is steady. There's lots of buyers out there at the right price. However, I don't foresee a dramatic interest rate reduction that is going to create this wave of pressure on new buyers into the market. I think we're, again, in a maturing, expensive landscape where interest rates will slowly come down, but I believe they'll come down a lot less than people are expecting. So in summary, BC and Canada's population is ever increasing near all-time highs or at all-time highs. The Bank of Canada held its announcement rate in March, probably will hold it in April, and probably will reduce it in June if inflation continues to go down. We are finding that, we're probably having a market rate now in the Metro Vancouver area that's 7 to 15% busier year over year, but it's still second slowest in the past 6 years and about 15 to 20% below our 10-year average. And we are projecting that 2024 will have low single-digit home growth price increase in and around the 3 to 6% range. So all in all, you're in a mature, expensive market if you're in Vancouver. We're I'd say past the bottoms, and now we're starting to see a little bit of price growth. And if you need to have some real estate advice, please reach out to us. We're here to help. Thank you.